free
qualified
money,
dividends become.
guaranteed.
I should clearly be reading the comments. Is that what's going on here?
How
I'm
do you?
clueless because I'm not reading the comments.
I'm laughing because the comment he said then and then right after.
Oh, okay. Yeah.
Now,
I'm not schizo. Get picked up.
Yeah. There's no correlation there. None
No
whatsoever.
correlation.
for episode 100, we'll have Retire on Dividends on. We won't have Jay on. We won't have Strongman and
man.
Echoes debate for the
No, I
presidential.
don't think it would be wise to have. We'd have to make that episode members.
We should. That's good.
So with Yieldmax
Yeah,
products, I think the only thing, like, I found them really interesting, but the only thing I found attractive about them was that they could be hedged, that you could just buy puts, and that the cost of getting into the put was less than the distribution they're going to hand you. And so if you're confident that the share price is going to trade sideways or go down, you can just place that bet. You can buy shares, buy puts with a strike that's like, a couple dollars higher than the shares you bought. And sure, there's some extra value in there. You're paying a little bit extra for the puts, but what you're getting is you're getting a higher delta situation. It's going to provide better coverage for you. And the cost of doing that was like, the last time I looked it up was like half the cost of half the value of the distributions. So then you set yourself up, instead of a 50% yield thing that goes down, now you're at like a 25% yield bond. And basically a 25% yield bond would be super attractive, except that part of that value, the hedge, you have to pay both long-term and short-term blended taxes on because it's an option position.
Right.
But it isn't. But then the counterpoint to that, wouldn't you be still at the massive risk of an individual stock selection? So let's say you're on TSLY when you're doing this, and it doesn't crash on the ex-dividend day, but it crashes on another day, like another business event occurs. The thing craters. You might be lucky and have the puts.
Yeah. What I'm saying is you only own the shares if you're also going to cover it with puts. And, like,
you have to be constantly covering it.
Yeah. 100% of the time. You buy puts with like 6 months of time on them. And then like when 3 months hits, you roll to deeper out. So you don't take too much in theta losses, and you just constantly roll. And every time you roll, it costs money. But the amount, the last couple times I looked this up a few months ago, the cost of constantly rolling these puts was about half of the value of the distributions. And that's been the single most attractive thing about TSLY to me. It's not the cash flow. It's the fact that the cash flow is bigger than the cost of hedging.
Look at this Chavez loving boy over here.
We actually have a make-a-wish, everybody. We have the Cash Flow King has recently passed 600 subscribers. So we have a make-a-wish. It's a make-a-wish kid. He wanted to come on. It's his last days. He got a new haircut, so he's on.
Well, now that he's on here, he has to answer some questions like, what did he think about the most recent high tide earnings report?
Yeah.
Yeah, what'd you think?
I don't listen to Shitco earning reports, so I don't know. Unless I'm sorry.
Sunglasses come down.
I'm kidding. I don't follow it, so I can't give it a opinion.
If it will stand for 10 more minutes, that's
No,
Fiscal. We made it to lead the weekly recap. I'm cutting chromosomes right now.
Let's see. High tide. How was the last earnings report? You guys already covered that, I'm sure.
It's pretty good.
It was pretty good, but the share price went down anyways, as usual.
Yeah.
So something was not good.
No, it was good. The content of the report, the numbers that I read, attractive, quality.
It happens every time.
The share price went down. It doesn't. This is the stock market. Things don't have to make sense.
Then why do you buy it? Like, why don't you just sell it before earnings and then wait for it to go down and then buy it again?
I'm just going to buy stuff.
I have the advantage of waiting until after every earnings call. The earnings report hits, I get the call the next day, and then I can wait like 2 or 3 weeks and be super patient about buying the next bottom. There's no rush. It's been like this for a few years now. That's just the way it works. Goes up into earnings, really attractive earnings report hits, share price goes down.
Does it have a lot of There's context there for that joke. I promise.
promise this context.
Yeah, we tie our
Dude,
David.
my name has been slandered. I have been dragged in the mud. I have become all these things. I don't know how. I was gonna say with high tide, is there a lot of sell side coverage on it, or any sell side coverage?
So it used to be that there were only 2 analysts covering it, and now it's up to like 7 or 8 analysts. Most of them are Canadian. I think only a couple of them are US based. I haven't found anybody printing like a short report or any. I found some bears, but most of them are really kind of dumb. Most of the smartest bears I talk to are not fundamental anything. They're just short term technical traders, and they just spread FUD. The smart ones. Most of the ones that try to like spread fundamental slander, they just end up sounding really stupid, like single digit IQ dumb. Like they say things that don't make sense, like the company's not going to be able to pay off their debt, and I'm all like, but they're cash flow positive, and you know.
Well, they don't have a really high short interest, so I don't think that's like what's pushing it down necessarily. I don't know what it would be.
Yeah.
I don't know if there's like someone that holds a lot of it, but
Well, so if you know it's going to go up into earnings, you can just buy like a month beforehand and then sell into like the day of earnings and the day before and stuff like that, and that produces selling pressure.
And I think we're missing a big point. It's that how much of this stock float is owned by retail investors?
Like 80% or 75% or something. A huge.
Oh man,
you're asking for volatility, basically.
Yeah.
If that's the case, you're asking for volatility, because then whoever's watching right now,